Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to provide an updated discussion to the Death Cross rally that we said was a likely scenario just a few weeks ago. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That sale is going to end at the end of the month, so just in about a day or so. Let's go ahead and jump in. Now, I wanted to provide an update to our prior discussion about the Death Cross because at this point, it does seem like generally speaking, most of what we previously expected has come to pass. Okay? If you're unfamiliar with what I'm talking about, before the Death Cross even occurred, I said, all right, I know what typically happens when a Death Cross occurs with Bitcoin, right? Normally what happens is we pump into it. Okay, now we looked closely at what happened in 2019 and said what's likely to happen. I think we made the video right here. We said what's likely to happen is we first get a little bit of a pump up, right, from 25.7, right, go a little bit up. We got that, right? We sort of had this little move right here from 25.7. We went all the way up to, about 26.4 or so. And then we said, all right, and then from there, you go down and sweep these lows at 24.8, right? You actually go down right before the Death Cross hits, right? You go down right before the Death Cross hits. And what normally happens when you go down right before the Death Cross hits is it leads to people selling because they think, oh, there's a Death Cross. That's a bad thing. And then they sell into the Death Cross. But the reason why oftentimes that's a bad strategy is because golden crosses and death crosses, by definition, are lagging indicators. They are based off of moving averages. And moving averages, of course, are lagging indicators. And more importantly, simple moving averages are even more so lagging than exponential moving averages like EMAs. So when you see death cross and when you see golden cross, what tends to happen in the short term is the opposite of what you expect in the short term, right? So that's why we put out a video before the Death Cross. We saw it coming. We sort of projected it out to come, mid-September or so. I think we said September 11th or 12th it'll hit. And we said, all right, slightly up, fade into the Death Cross, sweep these lows, and then go back up. And then fade, and then down, right? Now, we did sweep the lows, but we did not actually go below the lows, right? So we didn't, we got pretty close. We got within like $100 or so. But technically speaking, it hasn't been a lower low yet. And of course, we need to be technically correct here. It's an important nuance to point out that we faded into the Death Cross and then we pumped up into it like our prior expectations. Now, we talked about several different scenarios, right? I mean, this was one scenario going all the way back up to sort of where it started to break down and then fading down. And then we came up with another video after the Death Cross actually hit, right? Just right after it saying, all right, looks like the Death Cross rally is in fact materializing. Where will it actually go? Now, if you're looking for me to give you the answer to that, I unfortunately will have to leave you disappointed because I don't know where it ultimately tops out. And in fact, many people would argue that it will just keep going, right? There's going to be a lot of people that would just say that that was the only correction, right? And that it'll just keep going. And there is certainly, evidence people could point to try to support that claim. And I'm not trying to dispute that. It's just that my view in general on pre-halving years, not from like a TA perspective, but just from pre-halving years, what normally happens, and I've said this many times, is that we wreck the bears and the bulls, right? We wreck both sides. And that way, by the end of the year, we're all sufficiently wrecked, right? Whether you're a bull, whether you're a bear, it doesn't really matter. Everyone gets wrecked, typically in the pre-halving year. Now, some people, they're a bull for half the year, they're a bear for half the year, so they sort of switch teams at some point. But just from a more generalized perspective, we wreck the bulls, we wreck the bears, everyone gets sufficiently wrecked by the end of the pre-halving year. So it's because of that view that I have that sort of supports the idea that whatever comes would likely be a lower high, okay? Now, again, you can come up with reasons, I'm sure from a TA perspective, why that's not the case, but just from my own experience in pre-halving years and just looking at all three prior pre-halving years, That's what usually happens, right? We wreck both sides. And that is why I think that this will ultimately fade into a lower high. Now, we sort of drew out three potential scenarios. This was sort of the most optimistic scenario that I could think of, right? Not that I could think of. I mean, like, yes, I can think of a more optimistic scenario than going to 29K, right? We could go to 30K. But when we sort of drew these things out, it's like, well, what are some major milestones and why could we see it, sort of fading at various levels? And this one, the more optimistic scenario kind of has you going all the way up to sort of the breakdown point, right? I don't know if it's going to go back up that high. I mean, we can also come up with plenty of technical and I'm sure we draw a line on the chart and it'll tell you that it could fade somewhere else, right? I mean, look, let me draw a line on the chart, a magical a magical line that tells you where the price gets rejected. I mean, maybe this is it. I don't know, but what I will say is that in the short term, we are above the 50-day, or above the 50-day. We did have a wick back down to it. Okay. And we are struggling to get above the 21-week EMA. So this green line right here, that's that 21-week EMA. We're just looking at it on a daily time frame, but it is still the 21-week EMA. And you can see that so far, every time Bitcoin comes up to this 21-week EMA, it kind of goes right above it, and then it just sort of fades back down, right? Exhibit A, Exhibit B, and potentially Exhibit C here, just simply trying to get above the 21-week EMA. But at this point, we haven't actually seen a lot of success with that. Now, there are prior examples of where we will see things like sort of like break down and then sort of rally back up to where the breakdown occurred and then fade from there. I believe we've talked about plenty of those examples. We've talked about how the altcoin market has done that a lot. I'm just trying to think of a quick example. Like I believe ADA did something like that, right? Like so it broke down here, and then it sort of went back up right to the breakdown point, and then it just faded back all the way back down. If you look at what Bitcoin did in 2019 after the Death Cross rally, it rallied for about a month, or not even a month, right? It only rallied for a few days, but it took about a month for it to fade back to where it previously was before the Death Cross rally occurred, right? So like if you look at this Death Cross rally, we got it late October, but by late November, we were taking out the lows from where the Death Cross rally originated. And that's an important thing to say. I mean, look, about 30 days later, we took that low out, and there it was, it was another lower low. So when I look at it today, I think, hey, maybe there's another a scenario where this low gets taken out, right? Not in the not so distant future. Theoretically, if it doesn't happen, in the next couple of days, it doesn't mean that it can't happen. Say mid-October. I mean, this low here was mid-September, really close to sometime the second week of September. So it's really not that far away, that month, sort of that month window. So what I would be looking at is does this fade back down? Can it rally up? We do have the 200-day SMA all the way up at 28K. Another thing at 28K is about the 20-week SMA. So you can probably find reasons that we could theoretically push higher. But I do my ultimate expectation is that whatever it is, whether we've already topped out, whether we go maybe just a bit higher up to the 200-day or the 200-week, my expectation is that it ends up being a lower high. That is my expectation. Sort of the most optimistic scenario that we previously drew out was, going all the way back up to the breakdown point. But that's risky business, right? It's a risky business because it could fade at any point and go back down. One reason to potentially be a little cautious here is when we have a government shutdown. I mean, I'm of the opinion that, especially the S&P, that it really likes to climb the wall of worry until it has a sufficient reason not to do so. Usually that sufficient reason is the labor market showing signs of weakness, which at this point, it's still kind of hard to say if there's really a lot of weakness there. I mean, it still seems relatively resilient to me. But we also know, and we discussed this back in July, that the S&P tends to get a seasonal correction in, August and September of the pre-election year. right? And what normally happens is it kicks Bitcoin into a downtrend for the rest of the year, regardless of what the S&P does. S&P in 2019 was putting in new highs in Q4. Bitcoin was in a downtrend in Q4, right? Like over here, Bitcoin was in a downtrend for, basically starting in July all the way through the end of 2019. And if you remember, if you were to overlay the S&P to that, what you'll see here, sorry, I should probably put this on a new scale. What you'll see is the S&P was putting in new highs, right? So we talked about that all year, that in line with the expectation that it doesn't really matter what the S&P does in the second half or in Q4. If it goes up, Bitcoin could still be in a downtrend, just like it was in 2019. And if it goes down, then that's probably going to just provide a headwind for Bitcoin. Okay? But this month, the S&P went down, and at this point, Bitcoin is up on the month by a few percent. So, I mean, it certainly doesn't have like a perfect correlation or anything like that. But one way I like to think about the crypto market is it tends to move more discreetly, right? It takes a lot of energy to sort of move it out of a certain level, right? It takes a lot of energy to move it out of that level. But once you get enough energy to move it at that level, it then moves wherever it's going really, really fast, right? Think about, like, I don't know if you guys have done any type of, like, you search for a global minima or global minimum, and I don't know if any computer scientists or engineers or physicists, right? But if you're running one of these searches, whether it's like gradient descent or whatever it might be, you can get stuck in sort of a local minima. And I'm sort of representing not necessarily just price going down, but also price going up. But in order to sort of get out of that and to search for sort of a global one, you have to exert enough energy, or exert enough something, right, to sort of get out of that global minima, right, before you can then find, or that a local minima, before you can then go find potentially one that's more global, or one that's another local one but maybe a little bit lower. So crypto moves a lot more discreetly than the S&P. The S&P tends to move more continuously. The Bitcoin, it's really discrete in its movements, and one way to visualize that is to just look at these weekly candles this year, right? And I mean, it just does nothing, and then it just goes really quickly to wherever it's going to go, right? And then does nothing, and then really quick move, does nothing for a while, and another very quick move. And then here, about halfway through the year, arguably the trend has started to change, right? And what did we say? Up for half the year, down for half the year. What's gone on so far? Bitcoin has topped out in July, which is about halfway through the year, in early July, right? Early to mid-July, which is about halfway through the year. And what do you notice about this weekly candle? It's a 10.5% drop. In terms of a weekly open to weekly close, that is the largest drop we've had in any given week. Now, if you look over here at the March drop, that was a pretty big candle here. At one point it was, but again, from a weekly open to weekly close, this is the largest drop we've had this year. And it occurred after the halfway point in the year, in line with our expectations that Bitcoin goes up for half the year and down for half the year, right? So I'm thinking that, you sort of go up like this, right? If we sort of draw a path here. So you go up for half the year, and then the trend shifts where now you start to go down. Of course, just because you go down doesn't mean it goes down in a monotonic fashion or a linear fashion. It's a stochastic process, right? And so you can go up, and then you can get rejected, and then go find a lower low, right? Take out sort of the June low, if you will. Now, on a weekly time frame, Bitcoin is still below that 21-week EMA. And I've said before, because people ask me, like, well, what would it take to change your bias? I mean, again, like, I'm going based off what I've seen in pre-halving years, and what the data says is the most likely outcome. So that's why I think this way, and so I think that it's likely going to be a lower high. In order for me to really change my mind, I think I'd have to have multiple weekly closes, like 3 consecutive weekly closes above the bull market support band with follow through. Sometimes you get these moves above it, and then you get another weekly candle above it, but there's no real follow through on it, and then we just fade back down. So you would really need to see something like that, I think, And until that happens, then I would assume the status quo remains unchanged, and that whatever comes from this rally following that death cross is just another lower high. Now, that doesn't mean that after every single death cross, it doesn't mean that prices have to trend down after whatever death cross rally occurs. For instance, if you were to look at what happened in March of 2020, just sort of cover all the bases here, and just so you can see that it's no such thing as a sure thing. Look at this death cross right here in March of 2020. If you had looked at that death cross and thought to yourself, oh, that means prices have to trend down, for a lot longer, then you would have missed out on this entire move. Okay. But what do you notice about this death cross? It occurred after more than a 50% drop, right? Like this drop over here, if we just sort of take this, this from here to here, this was a 63% drop. And we basically swept these lows over here, right? It was our macro higher low. And then if you go back and look at 2015, there were multiple death crosses, right? There were multiple ones. And in fact, there was one here that also occurred, right? We had, we also had a couple over here, one over here. We had a death cross right here. And you can see that prices got relatively flat for a little bit, and then we went into a bull run. But again, this death cross came after a 50% drop, right? So, and that was our sort of our macro double bottom, right? On this chart, it's a lower low, whether you want to call it a double bottom. If you want to look at another exchange and call it a higher low, I don't really care what you call it. But it was a significant move to the downside, right? It was a 50% drop. In 2020, it was a 60% drop, right? In 2019, when it was just a continuation of the trend, it wasn't that big of a drop, right? From this level up here, at least not comparatively, right? From this peak here to this low, this was a 46% drop, right? We had not really seen that entire 50 or 60% drop, right? The 60% drop back in last cycle was quite substantial, right? It was quite substantial. Note that this was a 46% drop, which is a lot, right? It is a lot, but we were coming off a much larger rally. This was like a 300, 400% rally. Okay, so I've said before that what we likely need to see is a macro higher low double bottom, or potentially worst case scenario could be a lower low. I just don't think that at this point, I don't think a 21% correction is enough to really justify, not seeing lower prices later this year. I could be wrong, right? I get things wrong. I could be wrong about that, but that is my view. And so right now, my expectation is that this will result likely in a lower high. We are still testing that bull market support band, and you can see the importance of these moving averages, right? Just think about how the market behaves when we're above it versus when we're below it, right? When we're above it, we tend to come back down and find support on it. When we're below it, it tends to act as resistance. And you can see even on a daily time frame. Look at this. Every time we keep coming up to that 21-week EMA, and then we just keep getting rejected. If we are able to surpass it, then the next major milestone is around $28,000, right? So I think you'd have to look at that as a potential area of rejection as well, if we're able to really move past that 21-week EMA. So, looking at this, obviously it's going to either, I guess at this point we know it's not this one. It's, either this one or this one if these two scenarios are going to play out. And we sort of drew this scenario out, right? Fade or go up, fade down, sweep these lows over here from June, go up into the death cross, get that death cross rally just when people sort of panic sell right here because they see they see it's a death cross. Like, oh crap, I got to sell because it's a death cross. But then normally we just pump into it. But the issue is that after that, we normally get a continuation of the trend, right? We get a continuation of the trend. And it's kind of like when you look earlier this year, right? If you look at the Golden Cross, what happened? What happened with the Golden Cross, right? So with the Golden Cross, we had a pullback into the Golden Cross, but the overall trend up remained intact, right? But we did get a pullback into the golden cross. Overall trend remained intact. So that's why, I've said, right, well, what if going into the death cross, we get a rally, but the overall trend remains intact, right? What's interesting is it would be somewhat poetic, I suppose, if this here, right? I mean, after we got this death cross, we got this golden cross pullback, and then we still got the continuation of the trend, but I suspect that at some point we will see a rejection off the 200-day again. Now, we already had this rejection off the 200-day, but really what you can see over here is that we then actually went up and then got the rejection off the 200-day. So I mean, if it were to play out like that, it could mean sort of fading and then going back up and hitting that 200-day or something, later on this year. But this is what we've said all year, and I'm not going to stray from it just because of what crypto Twitter thinks, right? If you think about it, a lot of people were very, very bullish over here, right? When we were at 31K and we said, guys, look, it's normally up for half the year and down for half the year. A lot of people were like calling for 40K. They were calling for new all-time highs this year. And then what happened? We just slowly faded down. We got that plunge below the bull market support band, just like we said was likely going to happen in August or September, thanks to a seasonal correction by the S&P. By the way, if you're wondering why the bond market is the way it is at this point, I'm not really commenting on exactly where it's going to go. I've given my thoughts, of course, on ITC Premium quite frequently as to how I think things are going to play out. But if you're curious, where the bond market is, or like why it hasn't acted as a great hedge in this time, is because at least not yet. I mean, I think it will as we get closer to a Fed pivot. But when you look at say, the S&P 500, right, and you just sort of look at 2023, and then you average out all prior pre-election years, this correction by the S&P is just pulled us back to where we normally are at this point in pre-election years. This blue line here represents the average of pre-election years going back to the late 1920s. So that, I think, is one of the reasons why, a lot of people have just been, saying that TLT is a hedge and that the bond market is it has to go up because if the S&P is going down. And I'm not necessarily saying that's not going to happen eventually, but one of the reasons I think so far it hasn't is because this correction by the S&P just got us back to where we normally are, right? It's not like this is really any different. I mean, where things could theoretically change is if we go well below, where this historical average is, and if we start to price in a recession, where that could come a material risk. So my guess is that this results in a lower high. Whether it's already topped out or we go a little bit higher, I don't know. It's always possible we go another $1,000 or $2,000 higher. But I suspect it'll be a lower high, and then it'll be a fade back down. It kind of reminds me of, and again, I mean, like we don't really have a ton of data yet, but when we have this high, and then we have this high, right? What this reminds me of, and I could easily see this getting into this same sort of debate, is what we've seen with the Ether Bitcoin pair, right? And I mean, if you guys follow my channel, I mean, we've been talking about so much. I mean, ever since the merge, we keep saying, look, Ether Bitcoin is just putting in one lower high after another, but every time it pumps up, people get really excited and they talk about how, they talk about the flip bidding and all this other stuff, and it just ends up being another lower high. Maybe we're going to see something very similar with Bitcoin where it just ends up being another lower high, but it doesn't stop people from saying, all right, all systems go and it's time to put on your rally caps, right? So that is something to consider, is like we've seen these patterns before where people get excited on these lower highs and then it just sort of keeps fading back down. Bitcoin, one thing that I still think needs to happen, and this is another reason why I think that it will take out these June lows, is there still is fluff excess in the altcoin market. And I know you're probably saying, how's it not been fully flushed out yet? And a lot of it has. Admittedly, a lot of it has. But the issue that I see is that the altcoin market in general, we've seen it many, many times bleed through the end of the pre-halving year, sometimes even into the halving year. Okay, some people say, well, no, that was because of the black swan, right? It's because of the pandemic. A lot of altcoins are putting in new lows well before that happened, right? I mean, go take a look at XRP. It was pushing lower in 2019, right? I mean, this is 2019 over here, just putting in new lows. This was December of 2019. December of 2019, it was lower than at any point it had been since since 2017, right? I mean, like, if you would DCA, this is why I spent so much time talking about how, like, DCAing altcoins in bear market years and pre-halving years are so dangerous, is because of this, right? I mean, like, imagine if you had DCA'd XRP all throughout 2018 and 2019. Like, literally, if you had just sat on the sidelines and not bought any XRP, and then decided you wanted to buy some at the end of the pre-halving year, you would have had a better price than anyone who had been DCAing it through this entire 2-year time period. You would have had a better price. And you would have even had a better price when the recession occurred in the halving year. Similar thing with ADA last cycle, right? Similar thing. I mean, yeah, you could have DCA'd it. Doesn't mean that everyone who just, here we were in December of 2019, and it was pretty low. It actually wasn't below these lows yet, but it's not like DCAing this was necessarily the best strategy. Now, I know what you're thinking. You're probably thinking, well, look what came after it. Yeah, but the point is their Bitcoin valuations kept going down. So, like, and that's what I try to stress is that, like, if you had just kept whatever you wanted in crypto, just in Bitcoin, you then could have used that Bitcoin to convert to those altcoins later, because a lot of those alts just bled against Bitcoin at least through the end of the pre-halving year, right? And sometimes into the halving year. So that's an important consideration. And one way to even consider that is to look at, to go take a look at total 3 minus USDT divided by Bitcoin. And you can see that it didn't even hit its final low before alt season occurred until January 2021. This means that collectively, not all altcoins, but collectively, the altcoin market bled against Bitcoin until the post-halving year. Now, plenty of altcoins bottomed out against Bitcoin before that period, but collectively, that's when the collective altcoin market bottomed against Bitcoin, was in the post-halving year. Forget about the halving year, forget about the pre-halving year, the bear market year. It wasn't until after Bitcoin's parabolic rally. And that's why you'll see a lot of people who've been in crypto for a long time, they tend to like to just stick with Bitcoin until there is a parabolic rally, because they just like, well, yes, it's true that some altcoins will outperform Bitcoin, but Bitcoin probably could easily outperform the collective altcoin market until it has a parabolic rally to its, to new highs, right? That doesn't mean that you can't make money in the altcoin market before then. One of the telltale signs for it being a healthier market, which I don't think it is right now, is that altcoins after a major low, altcoins will then tend to sort of outperform Bitcoin, and then they'll keep going up, and they'll get pretty large moves, right? We haven't really seen that. I mean, like in this case, look at the altcoin market. It hasn't accomplished much of anything, right? It just one lower high after another. And one of the reasons that I think that Bitcoin could just end up putting in another lower high is because I think the altcoin market needs to keep getting crushed, to put it bluntly. And this is one of those things as well where people keep getting excited on every single lower high, but look at the bull market support band for the altcoin market, right? We just keep getting rejected by it. We got this one fake out over here. Same thing the NASDAQ did in the dot-com crash. It got back above the bull market support band, put in a double peak, and then it just sort of slowly faded back down. And this pattern, we've actually seen this pattern before. If I mean, like, so here's the NASDAQ, right? Here's the NASDAQ. Here's that sort of that bounce into that double peak, fade back down, rally back up to the bull market support band, get rejected, and then fade back down. I think there's a chance that that's what Total 3 is doing right now. And one thing I wanted to sort of look at here is a very similar pattern that altcoins are potentially exhibiting, which is something that Bitcoin showed last cycle, where we basically just see these lower highs and higher lows. And if you're not familiar with what I'm talking about, and you can see over here, you know, the NASDAQ, it took a long time to really bottom out. It took 2.5 years. Last cycle, it took the altcoin market a little less than 2.5 years because the altcoin market kind of topped out in January of 2018. And then collectively, the altcoin market bottomed in March of 2020. So it took, you know, 2 years and 2 months. But if you look at like Bitcoin, last cycle, what do you see? You see the same type of pattern, right? Where it gets these lower highs. It also sort of, it likes to put in these higher lows as well. And then eventually what happens is that the bull market support band keeps coming down, and then it just sort of finally it pushes the price down, right? So the 20-week SMA acted as resistance. This sort of upward sloping trend line acted as support, and then eventually we just plummeted back down. And we had some pretty large weeks in here where, I mean, you know, altcoins went up, right? I mean, this is like 3 weeks in a row over here, back down. 2 weeks, just back down. Then eventually the bull market support band got close to it, and then we sort of capitulated down. Notice that this first low here did not touch this trend line, right? So like look over here at Total 3. This low here up to the top of what became the trend line, right? Up to the top of what became the trend line, down to the bottom, back up to the top, to the bottom, back up to the top, and then just get into this sort of this window over here where the market just gets squeezed. There's very little volatility, and then before you know it, the whole market drops. I think that could happen. I mean, I'm not one of the reasons. I mean, like think about the inverted yield curve. Think about how normally the recession risk materializes after the uninversion of it. Sometimes it'll occur during the inversion, but sometimes that recession risk doesn't even occur until after it. Now think about like the S&P 500, and we can kind of draw a lot of comparisons here. So look at the S&P, and then think about like the Russell. So look at the S&P in 2014 to 2016. Look what happened. It was a slightly lower low, very, very slight lower low from 2014 to 2016. Go look at the Russell 2000. This is kind of like your micro caps, if you will, but you know of the equity market. Look at what happened in 2014 to 2016. So yes, the S&P put in a slightly lower low, but look what happened to the altcoin market, the Russell 2000. It went down a lot lower. I mean, this is a 9% drop, which is a lot. I mean, it's big in the equity markets, right? I mean, the S&P barely put in a new low. I mean, just barely. I mean, this is like not even like a full percent or so. The Russell went down a lot more. Now look at 2018 to 2020. What happened with the S&P? It put in a lower low, about 6.5% lower. What happened with the Russell? How much lower did it go? 25% lower, right? So we have examples where when the S&P sort of double bottoms or a lower low, the riskier, the lower market cap stuff got absolutely demolished. Even though the S&P in this case was basically a double bottom, and in this case it was only a slightly lower low, all things considered, the Russell went down a lot more. And look at where the Russell is today, right? I sort of drew these trend lines I drew on here, probably 4 or 5 months ago, actually. I showed this on maybe not 4 or 5 months ago, maybe 2 or 3 months ago, but we showed this on the show we do on Mondays, the No Shill Zone, and sort of drew this out that, hey, well, what if it just sort of comes back up and then we just get a lower low in 2024 to sort of complete the same type of pattern. And if you look at that and you see how the lower market cap stuff gets wrecked on double bottoms or lower lows, but just how much more the lower market cap stuff gets wrecked. And then you equate that to the cryptocurrency market, you can kind of understand how, if the thesis is true, where both bulls and bears get wrecked, then that means that the likely outcome, in my view, is a lower high. And if we get a lower high and it leads to a lower low, and then we just go into this sort of this downtrend, then you have to start to wonder, well, if Bitcoin comes back anywhere close to these levels, I mean, even if it's a higher low, right? Even if it goes only back to like 17 or 18K, even if it's a higher low, the altcoin market just gets absolutely decimated, right? Because it's not even that far off of these lows. And remember what happened with Bitcoin in 2018, right? You remember what happened with Bitcoin, and we just showed it earlier. It was going through the same type of pattern where it was just getting these lower highs. It was also getting some higher lows, and then we just broke down, right? We broke down. So what if you get an outcome where the Bitcoin puts in a lower high, it gets this death cross rally into a lower high, and then it just sort of fades back down. If it comes back down here, then where's the altcoin market? Right? Where does it go? And if you look at like the NASDAQ and what it did during the dot-com crash, which is, I think, is a great analog, honestly. There's a lot of very similar moves here. How much lower did it go? Right? How much lower did it go than this low? That might be a good thing to look at. From this low, it went down another 27%, right? So that would be sort of the equivalent of looking at this low right here. So 27% below that low puts you all the way down, much closer to 200 billion. And it's not 27% below here from where we are. That would represent, a 36% drop. So I think that's like the issue that I have is and it's one of the reasons why I think that it could very well turn into a lower high, is you just simply, the sort of the micro caps, they just simply get wrecked. And one of the reasons they get wrecked is because they're just a function of excess liquidity, and excess liquidity is drying up. And we've talked about that as well. We've talked about it all year, I believe. And we have this, let's see if we can find it, the net liquidity indicator here. And if you were to, let's just move this to the existing pane above, right? So you can see this net liquidity indicator. The altcoin market tracks it pretty well. I mean, I'm not saying there's never any deviations. You can see that there are some, but I would suspect that at some point, the altcoin market, sort of falls in line with where liquidity is. The S&P tends to fall in line with it. It just isn't as dependent on excess liquidity. And you can see that the jaws have opened when it comes to the S&P 500, right? The jaws have opened. What do I mean by the jaws have opened? Well, when you look at it like this, you can see that net liquidity has gone down. The S&P went up. The jaws are starting to close a little bit here, as you can see. But the net liquidity has also been going down. So the gap hasn't really been closed that much. They've both been going down. There's previous examples, right, where the jaws opened up and then eventually they closed. And it's when the jaws close, right? When the jaws close, tends to be a great spot to get altcoins. When the jaws close. Think about altcoins in March of 2020. They were absolutely decimated. Absolutely decimated. Look at this. Jaws haven't closed yet. I don't know when they're going to close. Maybe Q4, maybe Q1, could be later. I don't know, but I suspect they'll close at some point. And fundamentally, why would it be the jaws closing that would mark the potential low for the altcoin market collectively? Well, it makes a lot of sense when you think about it, because the Fed, unfortunately, is not going to pivot for your altcoin, right? They're not going to look at these poor little altcoins and say, all right, they're down 95%, right? We got to pivot, guys. We got to get these guys some money. They're not going to say that. They don't care about the altcoin market. They just don't. They care about equities. They care about the S&P 500. They might not say they do, but if the S&P were sitting at 3,400 right now, they would not be making all these same hawkish statements, right? They would be a lot more dovish in their terminology. But and then you have to think why. Like, I mean, you might say, well, what if inflation's still high? Well, guys, lower asset prices leads to lower inflation, right? So if you have lower asset prices, if you have a recession, it's going to sort of help solve, at least temporarily, the inflation problem. I'm not saying it can't come back, but normally that's what brings inflation down in a sustained way is a recession. So if the Fed gets one and the S&P drops, what causes them to pivot? It's when the market tells them, right? It's when the market tells them they've done too much. Do you think the Fed cares that the S&P is at 4,300? No, they're probably happy that it's pulled back a little bit because it'll probably help with inflation. But if it drops down, if the jaws close, if the jaws of liquidity close here and the S&P's, all the way down here at 3,300 or 3,400, that's when the Fed starts to care. And when the Fed starts to care, that's when they pivot. And when they pivot, that's when liquidity comes back. And when liquidity comes back, that's when the altcoin market shines. Okay? Look over here in 2020. Altcoin market was still putting in new lows collectively, right? When liquidity came, altcoins shot up. That's where the oversized gains come from. The oversized gains do not come from buying every bear market rally in the altcoin market for 2 years and then becoming the bag holder of that altcoin. That's one of the reasons why a lot of altcoins never go to new highs, because everyone DCAs them on the way down, and then they just end up having so many more resistance levels, all these like psychological levels that people had bought them at. So by the time that altcoins get back up to that level, these bag holders, they sell because they just want to get out, right? They want to get their money back. A lot of new altcoins don't have that same psychological level. It doesn't mean that all altcoins can't go to new highs. In fact, many probably will see new highs eventually. But a lot of times, the reason why a majority of altcoins don't go to new highs is, well, there's several reasons. One reason is because, as I just said, they don't have all the baggage, right? Think about some of the altcoins from the last cycle. A lot of them have a lot of baggage, right? New altcoins, they don't have that baggage. Also, a lot of times when people make new altcoins, right, there's like some type of, they'll have some like team allocation or pre-mine and stuff, and they'll try to, they'll work to provide value, or to try to come up with some form of utility for that altcoin. Once it's been around for a few years, and a lot of these developers come and go for some of these projects, they don't care about it anymore, right? And that's why I've said many times, if the developer sells all of what they have, if they don't care about it, why should I, right? Why should I? So that's a big red flag for me when I'm looking at altcoins, is if the developers don't even have any, then if they don't believe in it, why the hell should I? And I tend to stand by that. If they're constantly selling, I'm not buying their bags. So that's just something to consider. So that is again a thing that and that's why I think the altcoin reckoning will continue, is just simply because liquidity continues to be drained. And if we're right about this idea of both bulls and bears getting wrecked in the pre-halving year, then that means that Bitcoin likely puts in a lower high, and then it puts in a lower low below 24.8K, and the altcoin market goes lower. And the issue is that the altcoin market is forming a very similar pattern as to what we saw Bitcoin form last cycle, and we could see a lot of them drop quickly. I mean, look at these alts. I mean, look at ADA. Like, it's knocking on the door at 25 cents. How long till it breaks? Some of them have already broken down. Like, look at Avalanche. It's already putting in new lows. Polkadot, it's been putting in new lows. Had you been DCAing Polkadot this year and last year, has it accomplished you anything? Anyone could come in now and get basically a better price than anyone who had been DCAing it for the last 2 years. Same thing basically with ADA. Same thing with, not with Ethereum, at least not yet. And you can look at a lot of the altcoins. Same thing with Avalanche. More specifically, more importantly, a lot of them just keep going lower on their Bitcoin pairs. Like AVAX Bitcoin continues to go lower. ADA Bitcoin, my guess is it's going to take out this this sort of support and drop down here. So you have to be careful with the altcoins, because a lot of people are just going to scream buy the dip forever, right? But the issue is that the DCA strategy, when people say DCA, it tends to work out a lot better for Bitcoin than it does for the altcoin market. And the reason I say that is not because they won't recover. It's just that if you just focus on Bitcoin in, especially during the pre-halving year, a lot of the alts are just going to bleed back to it anyways. So you could always convert your Bitcoin to those altcoins later on and still have exposure to crypto via Bitcoin just in case the market goes up. The thing is like, if crypto is going to go on a massive bull run, Bitcoin will be there, right? I mean, it's not like we're not going to see, we're very highly not likely not going to see, all these altcoins go to new highs if Bitcoin doesn't go to new highs first. That's the argument. So that's why we talk a lot about, about Bitcoin dominance and why it's so important. And by the way, I mean, I know we talk about Bitcoin dominance. I know people joke about it all the time because I talk about it so frequently, but I just want to say one thing. Bitcoin dominance, because people are getting a hard time about it all the time. This is the chart. I mean, this is what 2023 looks like. It's been an uptrend. But dominance has been more bullish than Bitcoin USD. And it's also been more bullish than a lot of other metrics in the cryptoverse. Bitcoin dominance has not had a single, close below the bull market support band in 2023. I'm not saying that it can't. I mean, it certainly could. But it's just that, even Bitcoin USD has gone below its bull market support band. Ethereum has gone below the bull market support band. Cardano dropped below it long ago, just as Polkadot did. Solana likely going to get rejected here by the bull market support band. Avalanche isn't even close to it. Matic is below it. Doge below it. Litecoin. Litecoin normally tops out in June or July of its halving year. We talked about that many times. And so on and so forth, right? So people can mock the dominance views all they want, but it's one of the very few metrics that has spent up until this point above its bull market support band. Hasn't had a weekly close below it all year. Again, I'm not saying that it can't, but how can that be the thing that you pick on, right? It's like it's one of the only things that has been above its bull market support band for the entire year. The pullback that we've gotten, like while it seems like substantial and it seems like the dominance is just fading, what is really going on? It broke out of a 2-year window, consolidation window, back tested it as support, also back tested the bull market support band, and is still slowly trending up. I don't see what the problem is, and I don't. And again, everyone on Twitter can sort of mock the dominance all they want. It's one of the very few metrics in the cryptoverse that has been above its bull market support band all year, right? So a lot of these people, they've been bearish on the dominance all year. So they've been bearish on one of the few metrics that's been above its bull market support band for the entire year. So it's so important to understand the dominance, because by understanding the dominance, you then understand the likely direction of the altcoin market. And if you understand that the dominance tends to go up in pre-halving years, and you know that Bitcoin goes up and down in pre-halving years, then you could have come to the conclusion long ago that the altcoin market is likely going to keep putting in lower highs in the pre-halving year. And if the altcoin market puts in lower highs in the pre-halving year and dominance is going up, right? Well, then, what was the point of focusing so much on altcoins? That's why we talk about the dominance so much. That's why we talk about it. By the way, one last thing. I know we've gone a little bit off topic here, but you see this? I feel like there's some confluence here, right? Look at this chart. Total 3 minus USDT divided by Bitcoin. Going up to these same levels, potentially getting rejected. What could this final plunge correspond to? Right? What could it correspond to? Maybe it corresponds to what the .com crash was, right? Once it takes out, once it takes out this low, and you just sort of get that final plunge down. Maybe that's where the altcoin market sort of breaks down here against Bitcoin. Again, going back to that same pattern we saw against Bitcoin USD in last cycle, total 3 minus USDT divided, just total 3. Look what it's doing. Lower highs, higher lows, just like Bitcoin in the last cycle. But what if this breaks down? And again, remember, Bitcoin broke down because the bull market support band just kept pressing it down. Remember? Just to briefly pull it up. See over here? Bitcoin putting in lower highs. It was putting in higher lows. And then it broke down. It couldn't get above it, right? It was just one lower high after another. And look, lower high, lower high, lower high, lower high. Every single time people got excited. I know I was one of them, right? Every single time we got excited, we kept saying, "Oh, well, technically it's higher lows. It's a good thing." And then it broke down, right? Kind of seems like the same thing could be happening to the altcoin market, right? Just one lower high after another. You can see that Bitcoin did get above the 20-week SMA briefly over here. Total 3 did as well. But right now, we just keep getting rejected by it. So, what happens if it just keeps going on and then eventually, just like we did over here, it sort of squeezes us against that uptrend line and then it has to make a decision as to which way it's going to break. And what happens if that decision point comes right as the unemployment rate starts to go up? And that's when the recession gets priced in. And that could be this on the altcoin market, right? And if that happens, then that could correspond to total 3 minus USDT divided by Bitcoin, sort of a measure of the altcoin market against Bitcoin, getting that final drop, the final plunge to 25%, right? I mean, it makes sense to me that like that could be a scenario to at least prepare for, even if you don't agree with it, right? Even if you think I'm just blowing smoke or something, it's not the worst thing to at least prepare for, in my view, because again, a lot of times I think the altcoin market is an oscillator at best, as history has shown us, and I would think collectively it's an oscillator at best. And you can say that your altcoin is better than it was 4 years ago, but Bitcoin is much further along than it was 4 years ago. And we got all these institutions fighting to get these spot ETFs going. Don't compare your altcoin to what Bitcoin was 4 years ago compared to what Bitcoin is today. And I think that the altcoin market will plunge to these levels. And it could be because it's playing out the same way that Bitcoin did last cycle. And maybe it's playing out the same way that the NASDAQ did in the dot-com crash, where it takes out those prior lows. And it wouldn't even be that surprising. I mean, again, look at Russell. Look at the Russell. It puts in a low in the midterm year, and in the actual election year, it puts in a lower low in the last 2 cycles, right? Low 2014, lower low 2016, 2018 low, 2020 lower low, 2022 low. Maybe 2024 is a lower low. Perhaps the S&P puts in a double bottom or only a slightly lower low, right? In 2015 and 2016, it was only a slightly lower low. Very, very slightly lower low. Russell got crushed, even though the S&P only went a slightly lower low. And if the S&P goes to a much lower low, where does that leave the Russell? So the same thing with Bitcoin. If Bitcoin goes to even a higher low, the altcoin market gets crushed. And what happens if it goes to a double bottom or even a lower low? Then the altcoin market just gets destroyed in that environment. And if you still think that I'm being too bearish on the altcoin market, then again, my sort of the hedge is to just whatever you want in crypto, as I've said for the last year and a half, right? I mean, you could just have it in not financial advice, right? But you could just theoretically have it in Bitcoin because it gives you some exposure to crypto. So, if I'm wrong and it's not a lower high, and if Bitcoin goes on to much higher prices later this year and I'm wrong, then that's the way you hedge, right? But I don't really see the importance of hedging with 100 different altcoins. I mean, because again, if the altcoin's going somewhere, it's because Bitcoin went somewhere first, right? That's the argument anyways. So that's where we are. I know this was more of a, I know you sort of went past just the death cross rally discussion. But look, we said we're likely going to go up a little, down into the death cross just before it pump into the death cross as it occurs, and then fade and go lower. And at this point, it seems like a lot of that has played out, with the nuance that we did not take out this low, not yet. But we did sort of go up, right? We first got that little move up, then down, then up into sort of the death cross, and then I'm guessing it'll eventually sort of fade back down into sort of a lower low over here. It's my expectation. And I mean, I know that September is almost done, and then technically right now Bitcoin is up on the month. So I mean, if you are a bull, then I mean, congratulations. This is, technically Bitcoin is up 4%, which is interesting. I mean, especially considering that the S&P is down 5%. If you told me going into September that the S&P would drop 5%, but Bitcoin will be up 5% or 4%, we're like, wow, like that's impressive. I also remind myself that usually when people start talking about how Bitcoin is diverging from the S&P, usually a couple weeks later, Bitcoin catches up and more to what the S&P did to the downside. So I do remind myself about that a lot. And again, it goes back to that discussion we have earlier that Bitcoin moves more discreetly, where it'll just sort of slowly move. It makes you think it's diverging from what the trend is, and then it just really quickly goes to where, what probably would have made sense earlier, but I think a lot of it can be positioning, right? A lot of it's just positioning, and maybe people are, maybe it's a short squeeze, maybe, whatever. I don't know. But we've seen that a lot. Right, we've seen that a lot happen in the cryptoverse, and we'll probably continue to see it. But the red flags always go up when people start talking about how Bitcoin is diverging from the stock market. And actually, it reminds me, I was actually looking at another metric earlier that you might be interested in. It's the S&P divided by Bitcoin, and I believe that it's actually testing its bull market. Look at that. It's testing the bull market support band right now. So this means, if basically, just sort of explain this, if this holds and goes up in Q4, then it means the S&P is outperforming Bitcoin. If we break down, then it means Bitcoin is outperforming the S&P. But you can see that, like a lot of people are talking about how Bitcoin is diverging from the stock market, and that the stock market has dropped and Bitcoin hasn't. What if the S&P catches, a relative strength in Q4 and Bitcoin doesn't? Just like in 2019, the S&P put in new highs, and I honestly think the yearly highs are in for the S&P. I think there's a good chance the yearly highs are in, just because a lot of times, going back to this year-to-date ROI stuff, yes, you can get a slightly bullish bias in sort of the November, December timeframe, but it tends to not be that substantial. And even if we did get that, it would not even get you back to these highs. So I think there's a good chance the S&P has already put in its yearly high, and that whatever comes in Q4 will likely just be lower than where we were back in the summer, is my guess. But yeah, I mean, if you look at the S&P divided by Bitcoin, kind of seems like maybe it's trying to hold support. I mean, look at this. What if it just simply holds support at the 20-week? We go into October, and then Bitcoin is all of a sudden a lot weaker. It doesn't have to be at least weaker with respect to the S&P. It doesn't have to be immediately, but that would be a concern that I would have, especially after living through what happened in 2019, where I saw the S&P go up in Q4 and I saw Bitcoin go down in Q4, and the altcoin market got crushed in Q4 of 2019, even though the S&P was putting in new highs. So just some of my own experiences, trying to base some of the stuff on the data. Just to quickly talk here a little bit about Ethereum as well. It has bounced here in the short term, and if it does want to revisit its own bull market support band, just for reference, that's up at 1728 to 1779. And as we said, right, like if you go watch these death cross videos, one of the things I said is that Ethereum normally gets a more substantial rally after Bitcoin's death cross, right? So like Ethereum got a death cross over here, right? But it did not really get that substantial of a rally. But just like 2019, it got a more substantial rally after Bitcoin got its death cross, and kind of like the same thing over here, right? Ethereum has had a pretty nice move here, but I suspect that just like Bitcoin, that this will hold resistance for Ethereum. And here's another way to look at it, actually. If you look at it like this, look at the bull market support band of the 50-week moving average. it kind of seems like that's where we are, right? Like right here in that August, September, October timeframe of 2019, sort of around that 50-week SMA just getting rejected by the bull market support band. I think that's what's going on right here. And then eventually it breaks down. Last cycle, it broke down in we had a more substantial breakdown in November. So just think about that. But that's where things are right now. I think that's kind of where we are, and we will likely see Ethereum sort of slowly trail down by the end of the year. And actually, one more interesting thing about these charts is if you look at Ethereum year-to-date ROI, look at it in 2023 compared to 2019. We're basically where we were. It's basically the same thing. We're where we were. And you can see what happened as we got into the end of the year. Look at ADA. Look at ADA. 2015 to 2019. Or sorry, 2023 to 2019. Very, very, very similar spot as to where we were back then. And it still faded into the end of the year. So you have to be careful with altcoins. They can fade, even if Bitcoin doesn't. Bitcoin ended 2019 above its yearly highs. Most everything else, most altcoins ended the year, Bitcoin ended well above its yearly open, not above the yearly high. It ended above the yearly open. A lot of altcoins ended 2019 below their yearly open, right? You can see Cardano was 20% below its yearly open. You can see that Ethereum in 2019 ended the year maybe about 5 to 10% below its yearly open. And I'm not going to go through all the whole list, but you get the idea, right? A lot of them ended the year well below their yearly open, and something very similar could happen this year as well. I mean, I don't know how long it's going to take to play out, but look at Ethereum in 2019. I mean, it hasn't really done much of anything. And now all it takes is about a 3% move to the upside for everyone to get excited. I've seen people talk about the Ethereum Bitcoin valuation a lot, and I keep looking at it and I'm like, well, guys, technically speaking, we just keep seeing lower highs, and I don't know what it's going to take for people to look at this and recognize the lower highs, but this has just been one lower high after another. And now this is all it takes for everyone to get excited, right? Just one little move up. We're not even at the bull market support band yet, which is still a little bit higher, 0.0637 to 0.0639. Still a little bit higher to go to get there. I'm not even saying we're going to get there. My view on the Ether Bitcoin valuation is it's likely going to keep going down. But that's where we are. I think we should go ahead and wrap it up. I don't know what I'm going on way too long. Anyways, if you guys like the content, make sure you subscribe, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We'll see you guys next time. Bye.